All right, so someone has asked a question, made a comment on one of our YouTube videos regarding the suburb of Glenroy. Now, look, I'll just clarify, you can buy in pretty much anywhere in Melbourne at the moment, unless you're buying out in Mickleham or Kalkallo or something like that, and make money. But really, when we're making those, top five, top 10 lists, it's really regarding the best place to buy for both a short-term and long-term perspective. And the focus is capital growth, of course. Now, we'll just run through the suburb of Glenroy. I don't think it's been picked up by many investors, but let's have a look at the data. All right, so Glenroy, we're just jumping on hashtag at the moment. We'll have a look through and look to see if there are any red flags. Let's see. All right. So since about 2007, sorry, it's been slowly moving up in price. I mean, geographically, it's pretty close to the city. I mean, I know that there's a decently wealthy population there. Rental yields sort of growing very slowly, which is fine. Nothing unusual there. ISRAD score is a standard score, but just so that you understand, it's a lot higher than average in terms of the average incomes in those areas. 37% renters, anything above 45 or 50, I'd be concerned, and you would probably expect increased rental volatility. But right now, from what I can see, it's still okay. All right, so any red flags here? So the amount of stock on the market right now, it is good. It would foster a competitive environment, which is fantastic. On average, people are holding the properties for over 10 years, which is also fantastic. Currently, 28 days on market, which is also quite competitive, which is very good. Let's see, vacancy rate at 2.21. I mean, it could be a little bit tighter than that, but that's still within the normal ranges, nothing unusual. 66 approvals. I'm guessing they're knocking down a whole bunch of houses out that way and building some townhouses, and that's where those approvals coming up. It's a bit high. That's a bit higher than I'd like, but nothing too concerning. Let me have a look. Okay, let's look at the trends as well. Okay, so the stock on the market since about 2020, yeah, it's been steadily on a very slow and gentle decline. And as of about the start of 2024, we saw the start of an even greater decline. So yeah, the market is definitely tightening. But what I would comment on though is compared to some other suburbs we're looking into, how much this market is tightening right now is, I mean, it's not that significant, but it is looking like it's going to have some growth. Whether it's going to have better growth than the other suburbs we're investing into, that's a different question. I don't think it will, but I still think it's going to do quite well. Um, Days on market doesn't look like, even though it's quite tight, 28 days on market is quite good. It doesn't look like there's a sharp decline in the number of days now. And when you start to see that sharp decline, which I'll demonstrate using a different suburb, it really indicates that the competition has already come to the market, or there's a lot of interest in that market. Right now, it doesn't look like anything's changing really. So yeah, it's definitely hasn't been hit by a bunch of investors yet. Vacancy rate, okay, back in 2020, it was shockingly high, 7%. It's a bit crazy. But look, since then, it's been on the downwards trend. There's an overall trend on the downwards direction, and this little spike here, I wouldn't worry about that. I just worry about the overall trend because you can see it's correcting. So it shouldn't be too hard to get yourself a tenant, although it's not a very tight rental market like much of Melbourne. You just need to consider that. Let's have a look. Building approvals, like I said earlier, 66, but I don't think it's going to impact the market too much. And yes, look, overall, I'd say it ticks a lot of the boxes. The only concerning thing would be, I mean, it's not concerning. I'd just say the slope, the stock on the market is not as severe as some of these other suburbs that we're buying in. And when you see these very severe slopes, you tend to see a huge amount of growth that follows. And again, that competition really hasn't hit, but I can only imagine once people start to scope out this area, that days on market will get incredibly low, competition will drive prices up, and yeah, I don't think it's going to do too bad. Now, I just wanted to contrast this with Carrum Downs, just to give you an example of what I mean about those sharper slopes. Now, this area, it's already been targeted by many investors, interstate investors, big buyers agencies, etc. So we can see that more pronounced slope. Like I said, the stock on the market is tightening much faster than, let's say, for example, Glenroy. And not just that, but you can see over here, since about the start of 2025, you can see that the days on market is taking a sharp slope there. So now it's sort of sitting at 7 days on market as of last month's data, which we're going to have to see that average out over a period of time. But you can already see that competition is coming, and properties are getting snapped up in a week, which is a bit ridiculous. And look, we're seeing that the prices are already moving in the positive direction in Carrum Downs. So look, I would say overall both areas are decent. I would say Carrum Downs gets the edge for short-term growth right now, but long-term, I think they're both probably going to be about on par. So look, I hope that helps for Glenroy. Let me know if there are any other suburbs you'd like us to cover and deep dive into the data for you. Thank you very much for watching.